Charlie, can you hear us? Hey, Donovan. I may move back there because of the audio.
I'll move.
No, it's okay. I'll go back there. I don't like hearing myself talk.
Page. Bedroom. Okay. Boom, boom, boom. Okay, boom, boom, boom. I think we're okay. We got about 2 minutes before we officially start. Everyone's on. We're live streaming. So I think we're pretty good so far. Let me. Charles, is your title also vice president as well? Okay, I'm going to begin to start the webinar if that's okay.
Can you hear Charlie? Donovan, can you hear Charlie at all? Because I can't.
I can't hear him either. No, he hasn't responded. So
Let's send him a text.
good morning. Welcome to the Plan Room and today's webinar, Insurance and Bonding for Emerging Contractors. We're going to give a couple of minutes to allow our attendees to join the webinar. We have our guest speakers here today and myself facilitating this as the director of the Plan Room, Donovan Taylor. I'm going to share my screen for the presentation. Give us up for one more minute to allow additional attendees to join. All right, we're going to go ahead and get started. Again, my name is Donovan Taylor. I currently serve as director of the Plan Room, and today's webinar is Insurance and Bonding for Emerging Contractors. This is a webinar in collaboration with McGriff Insurance Services. Our guest speakers is Bo Duggar and Charles Peden on today, Wednesday, January the 12th, 2022. And we're going to start with a brief presentation about the Plan Room, and then we'll go into our webinar session. As you guys know, the Plan Room is a business accelerator targeting Black and minority contractors in the construction industry to help them upscale their business for new business opportunities and wealth building opportunities. The Plan Room was established in response to contractors participating in the One West Young Entrepreneurs Committee, finding that there was issues and barriers that our contractors were facing, and the Plan Room was established to help assist eliminate those barriers, provide training opportunities for our local contractors, and serve as a source and resource for our local contractors for new business opportunities within the area. The Plan Room is a physical space providing education, training, mentorship, professional services, and networking opportunities for our contractors and clients. Our whole goal is to build capacity and provide direct connection to bidding opportunities for our clients. providing marketing services and opportunities via our centralized web presence, as well as providing new and bid opportunities on our website and through many of our partners that have partnered with the Plan Room to provide access to new opportunities for our minority contractors here in the city. Support a community and an ecosystem of resources for Black and minority contractors, and to seek out candidates for our BIM training program. The Plan Room is located at 1815 West Broadway. We have a meeting space here for our clients and stakeholders to meet at our place to discuss development opportunities within the area. We have a computer lab and printing opportunities to provide training for our clients, a co-working space for our partners and partners here to provide direct services to our clients here at the Plan Room. One of the great services that we have here, thanks for one of our partners, Lynn Imaging, on providing us with a large format printer to allow our contractors to print out blueprints to help them assist them in their bidding and estimating for bidding opportunities here in the city. And we also have virtual access options for dealing with the definitely COVID-19 concerns, as we have hosting our virtual session here today. The overall goals and outcomes of the Plan Room is to build a capacity of our small and MBA contractors and job creation for our local community, and build entrepreneurship and sustainability for resources for our contractors. And definitely one of the key things that we're looking to build upon, and we're definitely partnering with some of our local law firms to assist our contractors on establishing and seeking joint ventures and partnerships for new opportunities. Definitely many of our contractors are small, and by establishing joint ventures and partnerships, they may build the capacity to land some of these larger contracts and opportunities. Definitely for the Plan Room to kind of serve as a resource and pipeline and network for opportunities for our contractors and general contractors, as well as seeking out MBE contractors for new opportunities. To increase the participation in local and regional construction market for our contractors here, definitely not just in the city of Louisville, but we're looking to build the minority contractors ecosystem statewide here in Kentucky and within the region. And overall, we're looking to build income and revenue growth for our business and clients. The Plan Room team first starts with our president and CEO of One West, Yvonne Smith. I currently serve as the director of the Plan Room, and pretty much my role is business development for our clients. We also have on staff John Hilliard, who serves as our construction manager, who provides our construction technical assistance to our clients to help them build up their construction business and savviness in the industry. And we also have on staff Ching Ping, who is our intern, who provides our technical and analytics for the Plan Room to make sure that we're really kind of being really intentional on our services to our clients, and that these services that we provide are, definitely have the analytics that we can basically go about and make sure that we're ensuring that we are helping our clients in the best way possible. Our kind of capacity and process of the Plan Room is as we take our clients and MBA contractors through our business technical assistance, where I sit down with them and have a consultation on what their business goals and desires are and how we can plan and map out a strategy on obtaining that. We also work closely with our construction manager, John Hilliard, to give them definitely construction technical assistance that they need to help build up their businesses. We're establishing a sound mentor program here to begin to connect many of our contractors with seasoned mentors in the industry to help them build up their capacity and savviness and knowledge in the industry to help build up their businesses. And then definitely we sponsor many networking opportunities here at the Plan Room and with our partners to introduce our clients and our contractors to new opportunities and training sessions that help them build up their businesses. And one of the key things we find that many of our businesses are in need of professional services. So we're working closely with our professional service providers within the city to develop products and services directly for our clients to help them build up their administrative capacity, that many of our contractors oftentimes can be bogged down with the work and not necessarily the administrative of their business. They have to also sustain and grow their business as well. So that's kind of a key component that we're building up here at the Plan Room. And the key goal is really just establishing a equitable contractor ecosystem here in the city of Louisville, within the region, that we're really providing our clients the education and skill capacity they need to move on to networking and resource opportunities, and applying for actually RFPs and contract opportunities, and landing those opportunities for growth and wealth opportunities that they begin to sustain themselves, their family, their business, and the overall community here in West End and Louisville City. And through these various opportunities, we said, we have business and procurement partner connections that we're having a direct and advocacy that the particular projects that are developing within the city are designed at the forefront and with mind of inclusion of our minority and small contractors, because oftentimes many times at the design phase, they kind of not putting quite products out that are being accessible for our smaller minority contractors. So making sure that we're working with our procurement partners to keep our smaller minority contractors in mind when they're designing these development projects. Networking and labor force issues is a critical issue here, and we're working closely with our partners like Kentuckiana Works and Youth Build on assisting our clients and contractors on building their workforce and conflict of issues they may have. Capacity building as far as working closely with our clients on technology, financing, and just operations of their business to help them move. And then working with our partners such as University of Louisville and some of our design firms on designing specific training programs for our contractors to help them directly build up their businesses. And one particular aspect that we have developed through the PAM room, definitely in the side of construction and dealing with diversity and inclusion on the design side of construction, and we're dealing with architecture and engineering side of construction, introducing individuals into that side, as we came up with definitely with our engineering partners of our BIM training program, which is Building Information and Modeling, which is a certificate program that we have here at the PAM room for 3D design modeling. That is a technology that is used for the construction design and development. This is a 14-week program that students go through, which is a 4-week computer literacy program, and then a 10-week BIM training program that students go to that also includes field trips and on-site visits at various construction sites and engineering firms, which at the end of the program, students have the capacity and knowledge to sit for the BIM technology certification, either Autodesk or some BIM technology certification, to assist them to land new employment opportunities in this particular area. And hopefully they will be advanced on, and hopefully many of them could go on to become engineers and construction designers themselves. So this is a new opportunity. We're so excited. We had our first cohort this past fall. We had 8 students to enter the program. We had 6 of the students to complete. The 2 students that were unable to complete, unfortunately, were due to health reasons. And so, thankfully they would have completed it had they not encountered those particular issues. But our 6 graduates that we're so excited that of the 6, those 5 who were actually seeking new employment opportunities were actually able to land new employment opportunities with many of our firms here in the city of Louisville and our partners. So we're so thankful of the success of the first cohort, and we look into our plan and set out our second cohort for the BIM training program later on this spring of this year. And so with that, we're going to move on into our webinar, Insurance and Bonding for Emerging Contractors. We have 2 of our speakers today. We're so thankful to have a partnership with McGriff Insurance Services. And we have Mo Duggar here, as well as Charles Peden, a vice president, both of serve as vice president of McGriff Insurance, and who's going to provide us with some skills and strategies on obtaining insurance and bonding for emerging contractors. And so now I will pass it on to Mr. Duggar. Thank you very much for joining us this afternoon.
Thank you, Donovan, and thank you again for putting this on for us this afternoon. I really appreciate the work and the partnership that we've been able to enjoy here together. And hopefully we can spend a few minutes maybe clearing up some misconceptions about insurance and bonding, and give the folks out there some strategies on how to properly put together a program that would both protect their assets and create opportunities for them to gain.
I'm sorry. No, you're fine.
Okay. So if you would, let's go ahead and move on to the next slide. All right, my portion of today's Zoom call is the insurance for an emerging contractor. And we'll talk about, first of all, what does a proper insurance portfolio look like? And then talk about what some of the strategies are together to put that in place so that you have something that's going to work for you in the event that claims occur. Donovan, do I need to turn the volume down?
We're good to go.
I want you back to make your mom. I want to see in your arms. You want to back to make you, but you get in my phone.
Okay, I think we're good now. I think.
Okay, let's talk about your insurance portfolio here. Sorry about that, I had myself muted. Obviously, you guys are contractors, so you're building, you're remodeling, you're repairing projects throughout the course of your work. And the linchpin to a proper insurance program is general liability policy. The general liability policy, Donovan, if you'd put that next there for us. What the general liability policy does is it creates a protection layer for you for the work that you're doing out in the field, and also creates a protection layer for the projects that you're on. So in other words, if your individuals that you're working with were to damage something, if you were to have somebody come on a job site, trip and fall, the general liability policy would take care of claims that would arise for the work or occupancy that you have on a particular project site. The next part of that program is an auto liability policy. And that auto liability policy can cover both your own vehicles, the vehicles that you are using throughout the course of your work on a daily basis, and also a coverage called hired and non-owned. So in the event that you have people who are out there that are working on your behalf, but not necessarily in one of your vehicles, if you were to be pulled into a lawsuit arriving from a claim that occurred, that you would have protection under your own auto liability policy. And I will tell you, it's really important that whenever you're working with your independent agent out there, whoever's putting together this program for you, that you make sure that you dovetail both that auto and that general liability policy together, so that you make sure that you have the same carrier on both of them in the event that you were to have a claim. So then we'll move on to the next section, which I believe is going to be the property section. And the property section really protects your items that you may have at your office or at a temporary location while you're working at a job site. And so what this does is that's going to give you the ability to maintain coverage for your own items, so that if you were to have a claim at that job site, that you're not stuck paying your own bill for that. And a lot of times you're going to want to dovetail that to the general liability and the auto policy to create what's called a package policy. And as a part of that package policy is also what we call inland marine or equipment insurance. Donovan, that's the next line there. Inland marine coverage. And some of you may have some question about what inland marine coverage means, but basically it's a hodgepodge of different coverages that are going to protect you in the event you were to have a claim with either your equipment out on the job site, the equipment and the building materials at the job site or in transit. Or it could also be a builder's risk. For example, if you're building a new constructed building and you needed to insure it during the construction process, this is also an inland marine policy. So it gives you a lot of flexibility on the types of coverages and the perils that could be covered for you. Then we'll move into the workers' compensation package. The workers' compensation protects you as the contractor from the claims that could occur to the employees you have working for you. And so what this does is it provides you a layer of protection. So in the event that one of your employees were to be hurt, they would provide both the medical expense for that injury or accident and any kind of downtime for that employee while they're not at work. And so, this gives you the opportunity to kind of rest assured that you're not having to pay for an employee that is at home while they're recovering from their injuries, or come up with a sizable medical bill in the event that you have somebody injured at one of your job sites. And so the other thing about workers' compensation is that you think of it being coverage for the employee, which is true, but the coverage is designed for the employer, because what it does is gives the employee an opportunity to go through a workers' compensation claim instead of having to come directly to the contractor. And it's vitally important that you make sure that you have this coverage in place, and any of the subcontractors that you may have working for you have this in place. I've seen over the years where we've had an uninsured subcontractor at the job site that would have one of their employees injured, and that injury dovetailed back to the contractor that actually had the subcontractor on site for them. So you want to make sure that not only do you have that workers' comp insurance in place for yourself, but any of the subs that you engage with on any projects that you have out there. And then we'll get into the insurance piece of the umbrella, I believe is the next section, Donovan. Oh, no, we're going to talk about, well, let me just bring up umbrella real quick, because I don't have it in here. But what an umbrella can do for you is it can go over top both the general liability and the auto liability, so that in the event you were to have a major catastrophe at the job site or a catastrophic auto claim to occur, that umbrella sits there as a excess point so that you can draw from those limits in order to protect you as the owner from piercing the corporate veil and perhaps being liable for something personally. And so a lot of people ask me over the years, what do you think is a proper umbrella limit? And that really just is completely dependent on the contractor in place and what it is that they're doing in the field every day, the background that they have, the type of experience that they've had, and the assets in which they have to protect. So that's really a long process to kind of go through and come up with an idea where really the end goal is to make you feel comfortable as a business owner. And then, so let me spend just a couple of moments here talking about some of the other coverages that exist out there as a business owner that really you need to take into consideration as you're going through this program and put together a insurance portfolio. And that's employment practices, cyber liability, and professional and pollution. And I have those all kind of bunched here together, but separate. And then employment practices, if you have a number of employees that are working for you, what the employment practices liability policy is going to do is really protect you from any instances that occur from the management of an employee. So in other words, that's your discrimination, that's your wrongful termination, that's your failure to hire, failure to promote, anything that you've got dealing with your relationship between you as the employer and your management and the employees or direct reports that you may have. The cyber liability, as you're transacting information back and forth over the internet, especially if you're paying bills, managing bank accounts and so forth, what the cyber liability policy can do is protect you from cyber criminals out there looking to steal your information, looking to perhaps freeze your network in an extortion scenario, or to try and maybe steal your employees' information. And so that cyber liability policy would sit there as the ability for you to have an ability to recover from an instance where someone were to create a cyber attack against your firm. And then the last one I've got on this slide is the professional and the pollution. And I have those together because for a lot of our contractors, we have markets put together that provide both the professional liability and a pollution policy, which a lot of times will dovetail together, so that if you're a general contractor and you're looking at what all the services are that you have as a general contractor and dealing with your subcontractors, dealing with the different vendors and so forth, and making sure that you're making professional decisions that go on through the course of that contract, that policy will take care of that. And there'll be a section that will take care of any kind of pollution incidences that could occur. For example, if you were to have a large amount of gasoline sitting at the property that were to spill, or you got into a remodel project that you did not realize had lead-based paint and we had to abate the paint, and so forth. So those more times than not are package policies that are put together through an Excel specialty or a CNA or an AIG or a Beacon One and so forth. And so so I think that certainly as you're talking with your agent or your broker, those are all items that I would highly recommend that you bring up to them, and you have a conversation about a particular circumstance to see which or if any of all of those may be applicable to you. So now let's talk about what the key ingredients to a quality insurance program could look like. All right, next bit. All right, first and probably the most important thing that you could do is finding the right insurance broker. And you'll hear them kind of back or agent. I'll give you a little bit of quick definition of the difference. An agent tends to have a couple of insurance carriers that they represent and sell products for. A broker tends to be someone who has multiple insurance carrier connections and can get your information out to multiple carriers at a single time. And so depending on your circumstance, it may be better to be working with a broker. It may be better to work with an agent. That's going to depend on what your appetite is and what your needs are. Next line. My personal opinion is you're looking for someone who has a strong carrier mix. So in other words, they have multiple carriers that are out there that can provide for you a quality insurance program at a good value. I would recommend staying away from the folks that represent a single carrier, because that eliminates some of the competition they can create within their own broker or agent. I know there's a little bit of an idea as to kind of like home and auto insurance. I would go out to multiple agents. I would see what they have to offer, and then I would take the best price. I recommend staying away from that because of the complexity of a commercial insurance program and all of the different coverages that are involved. I think it's important that you're finding that you're shopping for your broker or agent first. I think that's more important than my personal opinion than it would be to go out there and find the best price. A lot of times what you find is, especially on the agent side, where they have a particular set of products through one carrier, that they may be looking to maybe cut a few corners in order to give you a price that you like, and you could be missing out on some real potential claims that could be covered down the road. And so I would tell you, look for a broker or agent that has a strong carrier mix. Next. When you're talking with your agent, have a good, clear understanding of what the coverages are that are put together in the proposal. Take some time to ask questions. Ask questions about the general liability policy, about the auto policy, about the workers' compensation program. There are wide varieties, especially on the general liability, the auto, and the property. There's a wide variety of coverages that are provided by each of the different carriers that are out there. And some of those coverages could be absolutely critical at a time. And so spend a little extra time. No one really likes to talk about insurance, right? There's a few of us that are in the business that really enjoy the business and enjoy the process. But you're running a construction firm. You didn't get into the insurance business. It's not a fun conversation. Usually when you're going to use insurance, it's not a great situation because something bad happened. But I would encourage you in the beginning, when you're putting the program together, to spend a little extra time so that you have a clear understanding of what the coverages and the potential pitfalls could be as you're putting that program together the first time. Next. When you're selecting that broker or agent, one of the things that I've put on here is the ease of accessibility. You know, how easy is it to get a hold of either the agent or their staff when you need a certificate of insurance, when you need to add a vehicle, when you need to delete a vehicle, or even when you just have a question about your policy? Is it one individual that you're reaching out to all the time, or do you have a team that's behind them kind of putting together the program so that you know, hey, if I'm working with a particular producer that might be or broker that might be on the road on a constant basis, can I hold him on his cell phone, or does he have someone on the team that can kind of step in and take care of any kind of situation that I'm going to have in the meantime? And do they have people that are involved in claims? You know, when you're starting out, and maybe you're looking for just one individual, that one individual is readily accessible to you at any given time. Or as you grow, you're looking for, all right, I need to have somebody that's going to take care of my administration. Somebody's going to take care of my claims. Somebody that's going to take care of my questions that, you know, when they pop up, or somebody that's going to come out here and do some long-term planning with me. So I would certainly recommend that be one of the check boxes that you put on as you're interviewing and talking to different agent brokers. Next. The next item on here is a clear plan on long-term insurance stability. And so in other words, what is it that you can do as a insured to make sure that your insurance program is stable? That way you're not kind of going through the giant increases and giant decreases year over year, that you have a carrier that's going to be there for you for the long term, bouncing from carrier to carrier to carrier. And so that you get an idea of what my insurance program is going to cost me on a percentage of my either payroll or revenues, and what's going to look like over the next 5 years. What I planned over the next 5 years, and where does my insurance need to come along beside me to make sure that it helps me get to where I want to be in 5 years. And so having that clear plan, being able to communicate that openly and honestly with that agent or broker, I think is critical to having a program that works for you. Next. Everything that I have put together in this key ingredients to a quality insurance program, you've got to deal with somebody you trust, somebody you like to be around. You're going to spend probably more time than you want to talking about insurance. And so it needs to be around somebody that you like dealing with, that you like talking to, and somebody that you feel can be open and honest with you, and in turn, you can be open and honest with them. And so I really, really highly recommend that you work with somebody that you feel like you can trust, and that if you're working with someone today that you don't have a level of trust with, that you have a kind of a rethink or a readjustment to either you find a way to trust the person you're working with, or find somebody that you feel like you can. And so I think that's critically important. We all want to be around people we like to be around. And so I think the more you like to be around your insurance agent or broker, the more likely it is that you're going to be able to be open and honest with them, and they can feel that they're being open and honest with you. And so those are 6 points that I think are critical in putting together an insurance portfolio that works, and how to go about doing that. And I think that's all I've got on this slide. So I think we can open it up to any kind of questions and see if we can maybe provide a few answers in there too.
Okay, we currently don't have any questions in our chat, but we definitely welcome you guys to, if you have any questions, please enter into them in the chat, and I will definitely address them to our speaker. I'm going to check on our Facebook Live here quickly to see if we have any comments on our Facebook Live. We do have a question from Mr. Kyron Anderson of K Construction of what is the average pricing range for these services?
Kyron, I would tell you that is completely up to you individually as a company. A lot of it depends on what it is that you're actually doing on a daily basis, the vehicles that you may have, the experience that you've had in the past, the type of work that your employees are doing. Give you an example, a roofing contractor is obviously going to pay a lot higher in rates than someone that is a painting contractor. But that painting contractor could pay more insurance because they have a lot more revenue or a lot more employees, so it is based both on what you do and how much of it that you actually do. And so I wouldn't say that there's any kind of average pricing that's out there. I would tell you that finding that right broker and asking them to come up with 2 or 3 different proposals that you feel are strong competitive mixes. There's a wide variety of insurance companies out there that are providing these services at very competitive pricing. But a lot of times it does take some competition inside of that. I will tell you, within our own office, we're looking for long-term stability in our insurance programs. And so we feel like creating the long-term stability is by making the carriers compete and making sure that they understand that they have to compete. That doesn't mean that you go out and you quote your insurance every single year, but what it does is you come up with a game plan on what's going to work for you. You have that discussion with your agent and your broker, and you make sure you trust that when they get back to you and say, these are the 3 companies or the 5 companies or the 7 companies that offer quotes, that they've worked to make sure that those quotes are as competitive and as value positioned as absolutely possible. I hope that it doesn't give you a straight answer, but I hope it gives you an idea on how to get to that answer.
Thank you, Mr. Duggar. We have a follow-up question here by Mr. Anderson. This may be a little premature because it's regarding bonding, but how much bonding do you recommend for a company that has about 5 employees doing general contracting and overall carpentry work?
So the bonding, again, is going to primarily depend on what projects you're looking at. The bonding, the types, the sizes of projects that you get into, and when we get Charlie on the horn here in just a few minutes, we'll talk a little bit more about that. But again, it's going to depend on if I'm doing $300,000 projects, then my bonding capacity probably needs to be $300,000. If I want to do a $5 million project, that capacity probably needs to be a $5 million capacity. In turn, then as you're looking at what umbrellas could look like, then you're looking at, all right, what type of work am I doing and what kind of assets do I have to protect? And so again, those $300,000 projects, those might not take as much umbrella need for you as if you were doing $5, $10, $15 million projects. A $20 million project, I may need to up my umbrella from a $1, $2, or $3 million umbrella to a $5 or $10 million umbrella. And a lot of you folks out there that are looking at state or federal projects, there may be requirements within the contract that says, I have to have a $5 million umbrella. I have to have a $10 million umbrella. And so knowing that in advance and getting that priced out in advance is critical. You know, we've seen over the years where a contractor would get in and they would fill out a bid for a project, and we're in a hurry and we miss something in the bid that requires us to have a builder's risk project or contract, a umbrella of 5 million or an umbrella of $10 million. And then all of a sudden, you know, depending on what that type of project is, you know, we thinking we're making $100,000 in net profit. Well, when we go out and have to buy the different insurances that we missed, now we're only making 35,000 in net profit. So knowing what that contract looks like in advance and knowing what the insurance requirements look like in advance, and maybe even sharing that with whoever your agent or broker is, I think will help avoid some pitfalls moving forward. So I did a very long-winded version to that answer, I guess. So I did see one about a list of carriers that would have affordable pricing, right?
Yes, you did.
Okay. So again, that really is going to depend on what it is that you're doing and who you're doing it for and your background and so forth. So I can tell you off the top of my head, I could list 20 different insurance companies, and they'll range all the way from a Travelers and a Cincinnati and a State Auto and an Auto Owners and a Liberty Mutual. A lot of the ones that you hear advertised on the television, the Geicos and the Allstates and the State Farms and those folks tend to be advertising at homeowners and auto owners. The independent agent tends to be a better route to go through, because what they can do then is take a look at your set of circumstances, your exposures, put together what we call in our world a submission to the insurance company as a whole, and then allow them to compete on your behalf. And I think that's where you kind of can help drive down your costs, make sure you're getting the most value possible, is by allowing 2 or 3 of those companies to open and honestly compete against each other.
We have a question from Mr. Rodney. Is $3 million for general liability insurance realistic for an emerging contractor? And I kind of listed that, as you said, typically an emerging contractor is a business that has approximately 10 or more employees, if you want to come be clear on that.
Yeah, I think 3 million is a great starting point. I think a lot of that has to do with what the amount of budget that you have available to you to be able to have what we call an insurance spend. Everything that you do as a business owner has got a line item budget feature to it, and so insurance is just another thing that you're putting into your budget every year. If you've got the ability and you have the assets in which you need to protect, depending on the number of vehicles that you have, the number of employees and payroll you have, I certainly feel like 3 million is a great starting point for any contractor.
All the questions we have in the chat, and we have no questions in our Facebook Live at this time. I guess if you could speak on, I'll say particularly for definitely when we're dealing with our small and emerging contractors, the importance of maintaining good financial records and operations as part of definitely being an essential part of obtaining insurance.
Absolutely. So there are carriers out there that would like to take a look at financial data. If you've got an accounting system that can create financials that are easily to pull, that are accurate based upon the work that you're doing at the time, being able to list the vehicles that you have under your ownership, be able to provide complete descriptions of the vehicles and the equipment that you have, being able to even provide a job list on what it is that you're doing, the type of work that you've done in the past. Putting all of that together in advance, I think that's a if you pick the right agent or right broker, they'll ask you a lot of those questions up front, because what they're looking to do is not just throw a number out there. They're actually looking to make sure that you have a program that works for you. And so collecting a lot of that financial data and so forth, while it's not always necessary, there could be a grouping of carriers that could be very competitive. And that may be the thing that creates that more competitive environment for you. It's not always the case, but obviously having as much information about the type of work that you're doing, the type of equipment that you're using, the type of autos that you have, your driver's list. I would tell you, keep up your resume. If I can put together a submission and I can put a resume inside my submission for the key employees, that when that underwriter is taking a look at that program and they're trying to put it together from a pricing standpoint, they're going to give me better pricing the more complete picture that I have of that contractor. And so, that a lot of folks won't ask for a resume, but if you can put it together and give it to them and show them the type of work that you've done, everything that underwriter puts together in their file, that gives them the kind of comfort level to provide extremely competitive pricing. It only helps.
Thank you. All right. If more of the questions, we can move on to our bonding session.
Well, looks like we're going to give a few minutes back to you then. Give me a couple of minutes here. We're having some technical difficulties with Mr. Peden, but we're going to make a connection and we're going to get him on via phone, and then we can get started on his section of the presentation today. Okay?
Awesome. Well, in the meantime, between time, I definitely would to encourage our attendees to definitely visit our website, theplanroom.org, to find out more information about the Plan Room and our upcoming webinars that we plan on having for the year. They should be posted here soon on the upcoming webinars we have. And we definitely encourage you guys to definitely reach out to myself in the Plan Room. Definitely, our email address, I'll put it in the chat, is the Plan Room at onewest.org, as well as my email address is dtaylor@onewest.org. Definitely have shared information of upcoming webinars that you think you may need to assist your business and helping us plan out webinars that are in training sessions and networking sessions and mentoring sessions that will be of best benefit to your business. Please share those ideas with me so we'll begin to develop and plan our programming to the direct needs for you. And that is the reason we're here, to be a resource to you. So definitely I will be sharing that information here in the chat, so you can please take down that information to follow up with us here at the Plan Room.
Donovan, we have Charles Peden on the line with us now.
Okay, Mr. Peden.
Charles.
Donovan, thanks for putting this thing together for us, and hopefully it'll be of some interest to participants. And it's saying that I'm just going to kick it right on off and go into the ABCs of bonding. Very generic and very plain. It's I call it the ABCs. That means ability. Your ability to do a job. The background means that you've got key people or the people on staff that have done projects, the size and the scope that you're looking at. And C is credit, and that's primarily a strong banking relationship. So if you want to go to the next slide, we'll go there. In today's bond market, in the last few years, the bonding companies have really loosened up a little bit for the new or emerging contractors, or those who have not done bonding in the past, to make it a little bit simpler and a little easier. We have the capabilities in some of our markets to do a number of different types of bonding programs. Simply put, there's credit score programs that the decision on bonding is based on the personal credit scores of the owners. And as long as it's 680 or above, It'll meet a criteria that you probably can get bonds up to $500,000 just in the credit score market. And then you've got markets that, in one particular market that I use a lot, you can start with a credit score. You can actually go into what's called a VISTA program, and the VISTA program consists of a lot of different moving parts. The VISTA program can do bonds with collateral, or they can do bonds with funds control. And funds control simply means that the owner of a project deposits the funds as they are into a separate checking account that still has the client's, your company's name on it. The only difference is somebody else is going to sign the checks. I'm not going to get into the weeds of how that's done, but I've got several clients that use that, and they say the process is pretty simple, and the turnaround on your money back and your profits that is earned is usually 72 hours or less, as long as the right paperwork is there. So if you get into one of those programs and you do well and you build your balance sheet, then we simply move it to another division, and they can do bonds up to around $1 million, primarily based on a tax return on the company. If you get to that level and you want to go higher, then we would go into the standard bond market, the same company, and you will be working with the same type of bonding companies that large generals or anybody else uses. And as you progress, the bond rates get better. That's an oversimplification of the process, but it is primarily, in my eyes, almost impossible for someone not to be able to get credit for some type of bonding program to get started. Now, having said that, there's some paperwork that has to be done. I'll be more glad to meet or talk to anyone who might be interested in trying to go down that road as we go forward. The true things now, and I couldn't hear Mo's presentation, but one of the things that we all push pretty much is a trusted advisor team, which consists of a really good CPA that understands construction accounting, obviously a good attorney, and a good insurance agent, and a professional bond agent. In my case, I've been doing this for a number of years. All I do is bonds. If you have an insurance question or an insurance need, then I will be referred to Mo Duggar or somebody that is a professional sales agent. I am personally a member of the National Association of Surety Bond Producers, and in the state of Kentucky, there's only 5 or 6 of us that have that title. That just means a lot of resources and a lot of education and background in the bonding world. That's a really quick overview of bonding. I want to give you an example of 2 or 3 clients that I've handled over the years that really started out with no bonding power at all. They listened to me. They built a balance sheet accordingly. And now they're doing programs in excess of $100 million. Most recently, I've got a client in Amarillo, Texas that is, over the last 2 years, he's listened and done well. And yesterday I just had approved for him a bid bond of $35 million. And he started off with less than $1 million in bond. So there's all kinds of times that I have started with new contractors just starting. Some that have been around for a while and really didn't get into the bonding world, or maybe they didn't get to right advice on bonding. Now, I'll be more than glad to answer any specific questions that y'all may have. It's hard for me to talk to a group like this without knowing anything about the individuals I'm talking to, but we welcome the opportunity to talk with you in person or by email or however you most prefer to do it. But at that, well, I'm going to let, if you got any questions, fire at me.
Okay, let me see here. Definitely. Again, participants, if you have any questions regarding bonding, please enter them into our chat so we can present them to Mr. Peden. And I'm going to be checking our Facebook Live, see if we have any chats in our Facebook Live or questions?
By the way, we get some questions. I might add that this client in Emerald, Texas is a certified disabled veteran account. So we've got a lot of experience working with those types of clients as well.
We have no questions.
One thing I did mention, Mo, is that part of this program also includes SBA bonding ability.
What was that again? You said SBA audited.
The SBA doesn't require an audited financial statement, no. The market I'm talking about has the ability to approve SBA bonding themselves, so the process is a whole lot quicker and smoother and a lot less paperwork involved. Generally speaking, the one thing that SBA will do, if you have a line of credit established with a bank and there's a portion of it unused, they will count that as cash in their analysis of financial statements. So when you're looking at a financial statement, you're looking at the ratios between current assets and current liabilities. You want the current assets, which should be made up of receivables, cash or cash investments or something of that nature. And then the current liabilities would be anything due now or within the next 12 months on longer term loans. If your current assets are 100,000 more than your current liabilities, as a general rule, that will create $1 million in bonding power, as an example. Darwin, this is a very private business, and there may be some reluctance of people asking questions, and I understand that. I just want to reiterate that don't be scared to try to get bonds set up. It's not as bad as you might think. And once it's set up and it goes, it's just a matter of keeping financial information current and on a yearly basis primarily. And hopefully the client grows and bonding becomes larger for them at a better rate. The SBA's got rates are higher than some of the other programs I've been talking about.
You said and I just want to be clear on that. You said sometimes the SBA rates may be higher.
Well, generally the SBA rates are just going to be a higher rate because you've got the SBA fee, and then you've got the fee the bonding company charges. So it could be 2.5 to 3%. When you get in some of the other programs, you can easily get down to 2.5% slide, which falls after 250, 15 or 1.5%. Now I'm talking in terms of per thousands of dollars of a bond. And as you get larger and get away from some of those and move on into the standard market, you know what I mean? It's, the balance sheet creates the rate. The stronger, the lower the rate. Rates are also determined by the type of construction being done. For example, highway contractors' rates are lower than a general contractor building a building. It's just a different class structure. Roofing rates are generally lower than general contractors' rates.
I'm just typing a response, but we do have a question again from Mr. Anderson. Like basically, he wants to know, what are the best strategies of how having a disadvantaged business kind of establish their business to the point where they could be attractive for insurance and bonding. As we said, many of our smaller minority contractors provide very quality work, but oftentimes maybe bogged down with their administrative capacity and paperwork. What are the strategy of how getting a small business together in the capacity necessary to make themselves attractive for insurance and bonding?
Well, when we put a packet together, Donovan, on a new client, we're really going to try to do a pretty detailed history of the company and what they have done in the past. if there is that type of background there. As far as disadvantaged or minority-owned contractors, there's all kinds of different programs that can be helpful. There are mentor protege programs. There's you get your designation too, and some of those jobs that will be strictly designed for them, or just that type of contract would be the only bidders on it. Of course, one of the things that I see a lot is on any federally funded highway job, a certain percentage of that job has to be done by a minority-owned company. So you see a lot of on the highway construction jobs, the grading, the seating of the right-of-ways, the guardrails, a lot of sometimes traffic controls are done by some minority-owned to be able to create that percentage that the federal government requires of the prime general or the prime contractor on the road job. And I think that falls back in again to some of the types of programs that the federal government puts out there, that there is that requirement. And you probably, with your business, have probably been faced with that yourself, and not having to have a certain percentage of minority participation.
Awesome.
To answer that question, it's really probably a one-on-one meeting, and just see how the company's set up, do they have any type of financial statements, what quality of those statements, and things of that nature. That it goes back to what I said earlier about the guy in Amarillo, Texas, as an example. Early on, I was referred to him by one of my clients in Western Kentucky. And he does a lot of work and has a lot of contacts on Department of Energy sites. And he's been very successful in those jobs. And those jobs are, generally speaking, pretty high growth profit type jobs.
So we had a hand raised up by Mr. Jason Buckner, and I think I have allowed you to maybe unmute to speak, to share your question.
Appreciate that, Donovan. My question was this. Could you go over or walk through a scenario in which a bond needs to be actually used, and kind of what happens on the back end after that bond is exercised, if that makes any sense?
Well, it makes a lot of sense. What you'll find out is when you get your bonding program set up, a lot of owners will ask, can you get a bond? And when they find out that you're able to get a bond, they waive the bond. That doesn't help me much, but that's just part of what goes on. A lot of times when you're bidding jobs, they will require a 5 or 10%, federal sometimes it's 20% bid bond. That simply means that if you were the low bidder and you didn't execute the contract, then the bonding company doesn't happen very often, but they might have to pay that 20% or 5 or 10% bond fee to the owner. That very, very rarely ever happens. Bonding companies in general, make the statement here up front, they're not an insurance company. They're not like a general liability policy or comp policy. If you have a loss, then the insurance company steps up and pays. In the bonding company world, it's just totally different. They will expect you to pay all the bills, and if they have to pay any, they're going to expect you to pay them back, which comes into what's called an indemnity agreement that you would sign up front, basically guaranteeing you're going to do that. It's very similar to signing personally a note at the bank. They expect you to, the company can't pay it back, they expect you to pay it personally. Generally speaking, it would be, depending on the equity of the company, it does require all owners of 10% or more of the stock and their spouses to sign it.
Gotcha.
Some of these other examples I gave you earlier, we got to the point there that they were so strong that I was able to get the bonding companies to waive any personal indemnity, which tell you up front, and I mean this very sincerely, I work for clients, I don't work for bonding companies. But I'm going to find the best market at the best rate for any and all clients. I'm one that it's on a yearly basis. Basically, I go back and look to see what kind of rate structure we have on these individual clients, and are they at the point now that the rates can get better. I'm gonna get the best rate.
Well, can you guys still hear me okay?
Yes, we can, Mr. Buckner.
So here's my question. A lot of times we're talking about individual contractors. Is there any type of program associated with the group of contractors? Maybe if, say for instance, if the contractors on this call wanted to form a group of 10 contracting companies, is there any type of program that you have out there that we could actually get bonded as a collective group and do it that way?
I mean, yes, that happens very often. It would simply mean that you would have basically a joint venture, and the bond would be written in the joint venture's name, and that would include both or all companies involved. I mean, I do it frequently. To be able to get a larger job done, we may need to pull in another contractor that may be a little bit more financially or equal to or adds to the case. Another thing that can be done, depending on what these clients are doing, if they have a very sizable job and they have other subcontractors under them, then we possibly could get those subcontractors to bond back to our client. Therefore, really, it doesn't decrease the amount of the bond for the client, but it gives the bonding company, knowing that one of the major subs is bonding back, then there's liability is shared between two bonding companies. That makes any sense to you?
It does. Thanks.
Mr. Peden, I guess I have a question regarding bonding. I guess it's also to you, Mr. Duggar, as well. Do you see any insurance or bonding products by which the general contractor is providing that insurance and bonding for the sub?
Yes, I do, and there is a product out there that you can buy in lieu of a bond. It really is kind of it's still going to be based on a financial condition to be able to buy that insurance product. But I'm sure you have, and most very familiar with those CIP programs on the insurance side. A lot of times, a general or prime will, depending on their strength, they'll convince their bonding company that they're not going to bond any subs back. And what they do is simply charge the subs for the cost of the bond for their portion of the job. And therefore, they don't have to put the bond up to prime or their general putting it up. Again, it goes back to, if you're doing a $35 million job and you got a $9 million electrical contractor on there, you're going to bond him back. Generally speaking, anything over $2.5 million. Again, it depends on the strength of the general or the prime, but most cases, most of the major subs will be bonded back simply so. And I've got clients at university that bond everybody back. They don't care who they are, how good friends they are, or anything about their, they might be one of the greatest companies in the world. They don't care. They're going to bond them back. They put it in their overhead. And if somebody defaults or delays or something, they've got the leverage to push them.
Awesome.
There's so many different things when you get in the bonding world that a guy that does bonds for a living like I do, there's just little things that you can learn and do and help a contractor with. One of the things is until somebody's to the financial strength that doesn't make any difference, then I really don't like them to go out at the end of the year and buy something and pay cash for it. And take the cash out of the company. I'd rather see them go to the bank and amortize it out. And then maybe later, next year or two, go ahead and prepay it early if they want, so that they protect the balance sheet. But again, the bonding world, as you get into the bigger markets, the standard markets, I call them, it's the balance sheet that rules the roost, and that's cash, receivables, and not a lot of debt. Line of credit is extremely important to have secured with whoever the banking relationship is with. The bonding company want to see that if a given job, they have the money for for the startup costs until they start getting paid, and et cetera. But they can go with a line of credit, pull it out of that.
Awesome.
You can take, for example, just to give you a clear example, you could take let's say you had a fairly high line of credit, but you had enough collateral that the bank would take that and put it on a longer term. Because your line of credit is always going to be counted as a current liability unless it's an amortization to it. So therefore, you create, again, when you're looking at debt, you're looking at any payment's going to be due in the next 12 months as a current liability. So therefore, you take, say, $1 million line of credit, you put it on amortization, say your payments are, it's probably going to work mathematically, but say your payments are $2,000 a month, you've taken $24,000 in current liability, and you've erased whatever it figures out to, low help me, 978 or whatever that difference would be, pushing it to long term so it improves your working capital just by getting the bank to extend it out. It's just another thing that you learn when you're been doing this as long as I have, that you can legally and manipulate the balance sheet to help you a little bit.
Thank you.
The other thing I would add to the equation is when somebody knows that their balance sheet is built up to the point that all of my clients, when I'm finished talking with them and working with them for a year or more, they'll know how to read a balance sheet as well as I can. And they'll know exactly what the bonding is looking for and how it's going to be analyzed. So anytime you can do that and you get to a point that, say you may want $10 million in bonds and you don't want any more than that, and the working capital is substantially more than that, I would be the first one to tell a client, yeah, you want to take some cash and invest it somewhere else.
Well, I have a question too that go to both of you, Mr. Duggar and Mr. Peden, is like once a contractor maybe has obtained insurance and bonding, how often do you think that the contractor should go over a review of their insurance and bonding products? You know, would they should be annually, every 2 years, or how often would you recommend them kind of reviewing their product with their team, you know, definitely with their CPA, attorney, and insurance and bonding agent?
Look, I may be able to answer this because I'm pretty sure the surety process is very similar to what we do on insurance, and we actually do an annual review every year. So the idea being behind when your renewal comes up, that triggers us to take a look at it and say, okay, here's what the exposures look like today, and what do they need to look like going forward? What's the next 12 months going to look like for you? And is the program that as it sets today really going to be what you need for the next 12 months? And so we go through that process every year. That doesn't necessarily mean that we recommend going out, and if you're with carrier A, going out and try to compete with carrier B. But we do look at that every single year to make sure we have the right program in place, and do it early enough in the process that if we don't like what carrier A is doing on the insurance program going into the next year, we can go to carrier B and carrier C and carrier D to make sure we're keeping the value of the program where we want it to be. And Charlie, you can expand upon the bonding, the surety program, because it's a similar process, but also a little bit different.
Well, it's quite a bit different in the respect that I've got to emphasize that a bonding relationship with a bonding company is extremely important. So if you start off with someone and they're doing what you want done and they'll meet with you annually, as that relationship grows, I strongly recommend that you don't change a bond carrier. However, all of my major clients are backed up by more than one bonding company. So one company, things can happen. You can have an underwriter that leaves and goes, by the way, I don't work with anybody that's not not a decision maker on the bonding side, period. They've all got assistants, but if they want to do business with Charles Peden, the manager will do business with Charles Peden, period. End of subject. Now, a lot of times these guys will flip and go from one company to the next, and that's why it's important that, you know, you've got a backup to go to. Or if they, sometimes bonding companies, all bonds are over a certain limit are reinsured, just like insurance is. So they have some catastrophic losses or some big losses. The reinsurance carrier may tighten the belt on what kind of job they can bond, how big a job they can bond. When that happens, that's when I've got to move it to somebody else. Because of no fault to the client, then all of a sudden the world changes. For example, I had a very large electrical contractor down in Paducah that wanted to bid a job at Oak Ridge, Tennessee, and it was going to be, I think, 20 or 30 million at the time, but it was going to be a job that was kind of screwy. They wouldn't get on the job for 3 years, and it would take them another 2 years to finish. So you got a bonding company sitting there looking at an obligation that's 5 years. And they were with the market, and they approved everything. When it got into that length of the contract, this market wouldn't do it. So I know enough about who the bonding company was that did the Panama Canal expansion when they did it several years back. That was a multi-year project. So then I knew where to go to solve that situation. You've got to have a bond agent that does only bonds, that goes to the meetings and listens to the seminars. And all these companies have seminars for their agents on their bonding, what they're experiencing, what they're seeing, what the outlook's going to be for next year in their mind, et cetera, et cetera. I mean, we just went through a period of COVID-19, and early on, all these jobs were on the drawing boards and waiting contracts, and we didn't get them. And all of a sudden, then we got problems with getting supplies and vendors and getting materials, escalation of the pricing. So we had a number of seminars. We want to make sure that, you know, they're protected. And most recently, we had a contractor going down in Florida to do a job at one of the, I think it's one post down there that got blown up by 18 hurricanes. So you go into Florida, there's different codes, there's different rules. You've got to have the building that will survive a 35-hour wind, believe it or not, in there. And it's codes, and you got to know these things before you go into a state like that. And that's why my expertise was saying, hey, look, have you looked at the code? Have you seen what kind of rating you got to have for the metal roof and the building, and et cetera? So, et cetera. And my client's very, very astute. He said, Charlie, you're talking to the choir? I said, I may be, but I just want to make sure. But I don't want you to get down there and get in trouble. Have I lost y'all?
No, you have not. You have not. Some great points. What about, you know, definitely you said an annual review would if there's a significant change in your workload, would that also be a necessary time to kind of review your insurance packages?
Yeah, I would agree that especially as you look at particular contracts that are coming up, most of the contractors that I work with, we're probably having a conversation, if not every month, every other month. And a lot of it, especially as they're going through a growth pattern and seeing, okay, these are the projects that we see coming out. These are the types of projects we think that we're in a position to do. We can take a look at those insurance requirements in each of those contracts to make sure we don't have a surprise, similar to what, you know, I talked about in my section of the presentation, so that, you know, we know when we're bidding that there's a $5 million umbrella sitting there, or that there's a, you know, $2 million builder's risk, or that they require something specific on the general liability policy that's going to have a 2-year horizon period on it. And so, you know, there's just a lot of things that go into having that open communication. Again, I mentioned in mine, and I think it's it's critical on the surety side too, is dealing with someone you like and somebody you want to be around. Because if you're truly growing, if you're truly expanding your operations, you need to be having a conversation with your insurance broker agent on a very regular basis. And I would tell you, of all the clients that I work with right now, those that are in growth mode, I'm talking to them almost constantly. And I think if you've got that relationship with your agent broker, they're going to welcome the conversation. They're going to want to hear from you, because then they know and they feel comfortable that you feel like they're truly a part of your team. And so so I would think that, if you're growing and expanding, that communication is needs to be as often as possible.
Second, Mo, I think every contractor I've got, I kind of insist that they send the insurance requirements on jobs to their insurance agent, make sure we can review it and see if there's any special, like Mo's talking about, something out of the norm that above what they already have.
And there's a lot of benefit to having the surety contractor and the insurance broker working together. Because what they're going to do is you have that, I'm a contractor that I've been doing, $300,000 or $400,000 projects, but all of a sudden I see this really great job that looks exactly like what I've been doing, $300,000 or $400,000, my $300,000 or $400,000 jobs, but it's now $5 or $6 million, and I don't have a bond program that's going to approve a $5 or $6 million project, but I believe my financials are getting me there. And having that conversation well in advance with the surety agent, who in turn can look at the insurance broker and say, okay, this is what the project that we're looking at. Here are the insurance requirements. What's that going to mean to their insurance program? And do you have the capacity within the insurance program to meet all of the requirements? And if not, what do we have to do inside of this to make that happen? And we get circumstances all the time around some of the universities where they will ask for things in their insurance contract for a subcontractor that, quite frankly, they don't need. And that's primarily because they have a risk manager that's a risk manager for the university as a whole, but they're not a true construction specialist. And so they get into that particular position where they're trying to manage the risk, but they're asking for something that in the construction world, we know that they simply don't need. And so having that conversation, we've had one with the University of Kentucky recently where we went through and had what could have been a $200,000 or $300,000 expense on a $10 million project be waived in the contract. And so if we had just provided the quote and they had passed that quote along to the university, we as a taxpayer would have had to foot the bill for something that just wasn't necessary. And so if we can find that out through the process of looking at the project before it starts through the surety eyes, and then the risk management eyes as the insurance broker, hopefully the end product becomes something that's much more valuable to that contractor and that project owner.
I might add too, Mo, that it's a lot simpler process when you've got it all in one place, that when you're awarded a job and you need certificates and you need the bond, and it just flows a lot easier. You make one phone call and it's done. One other thing that I will add to this, and as clients grow, because I've been doing this a long time, and I've got great relationships with bond underwriters in the home office as well in the field, that they will give me the authority to approve about 80% of what one of my clients may need without reporting it to them. And I simply just do the bond and send it to them. As long as it meets the parameters of the agreements that I sign annually with them. Again, going back to the surety side of it, it's got to be a WebEx world or a Zoom world, although I couldn't do it today for some reason, that these in-person meetings with bond clients have been, the bonding companies, they wouldn't let them travel, period. Now we're beginning to see it. They want to get out of the field. They want to see the clients on an annual basis after the financial statements are available. And, sit down and talk with them. What's your plan? What are you going to need? So we never know for sure in the bonding world. There's always going to be an example of something that comes up and you've got an in on the job and it's a lot larger than what you've been doing, et cetera, but it's close, it's my back door. And there's ways to work around that to get you to the next level. And that'll happen sometimes at the last minute. And again, that's important to have the authority to go ahead and approve it rather than having tried to get somebody. I've got an underwriter right now that's traveling West Virginia, and I'm pushing with my client for a $5 million bond. Well, I've got the authority to do it, so I did it. We'll send him a copy of it, and I'll obviously report it without any question. But it's nice to have that pen in your hand that you do that yourself. Again, that's not given to a lot of agents. I will tell you that up front. I can remember a client years ago that was working with an insurance agent that was doing his bonds, and I don't think the insurance agent did much on the collective financial statements and send it to bonding company. I don't send anything to a bonding company until I first review it. And if I see some glaring error in there, and I've caught many of them, CPAs sometimes make mistakes. They're human. I've corrected it before the bonding company ever got it in their eyes. Most recently, I don't know, Mo covered this in his presentation, with all the PPP money that's been lent out by the government. Originally, when that program started, there was what was called an Employee Retention Credit, ERC, that was designed initially for the contractors or businesses that did not apply and receive PPP money, but they kept people working. So they will get it back as the rules change, and that PPP world, the rules change every month, basically. Then a lot of CPAs weren't aware of that, and I don't know how many times I've talked to Mo, and he's talked to clients as well, that I've had clients that weren't, that their CPA wasn't aware of it, and have gotten back $500,000 and $600,000 just because I knew what was going on. So I mean, there's some advantages of having people in this trusted advisor team that I talked about earlier, that not only do they want to see you succeed, and I do, because that means more money in my pocket, bottom line. And again, there's nothing too small for me to look at. As I've mentioned before, I can't count the number of times that I've written bonds for clients that for the first time just getting started, and they're out here doing multi-million-dollar jobs. Mo, I still got you.
We're still here. Yeah. There was a question that popped up, and Donovan was taking a moment to kind of go through that question.
Okay. Sometimes when I get an incoming call, for some reason this thing deletes. I had call come in, but I'm good.
No, I understand.
Shoot, what happened? Okay. Yeah, that was a question just for me in particular, and I agree. Mr. Buckner and I will be willing to assist on organizing that meeting with some of the participants here today on developing kind of a checklist and questionnaire for contractors for insurance and bonding, and addressing some of the issues and challenges some of these emerging contractors have on obtaining insurance and bonding. So we will definitely have a follow-up meeting with that, and that will be great.
Donovan, we have prepared a bond booklet. Includes questionnaire. It includes some blank resume forms. It includes some sample letters from banks about a line of credit. Sometimes the bank won't have a line, but they got a good relationship. Sample letters that they can get from the bank to know that there is a relationship. And as well as a personal financial statement form. And in the very back of it is a sample financial statement.
Awesome.
That when I meet with people the first time, that's what I go to that statement, and then I start teaching them how to read the balance sheet.
Awesome.
Or if they have a financial statement, I'll use theirs in lieu of. So, I mean, we can provide all of that information to you. That the questionnaire we use is one that I developed from NASBP, and it's acceptable to any and all bonding companies. So there's not going to be a situation where if you're with XYZ company, we need to move it. We got to get a new questionnaire done. No, this one will be acceptable in all markets.
And Donovan, that is a couple of years ago, we made that an electronic file. So the individuals that are out there that want to complete that questionnaire can actually download it, or it can be emailed to them to download onto their network or their laptop, and they can plug in the information as they go. And so that as that emerging contractor, as they grow, and that questionnaire may change over the years, the needs on that questionnaire may change over the years, that can be updated without having to recreate the wheel again and completely redo a brand new questionnaire at some point in the future. And so I think it's a great tool for them to be able to kind of help bring everything they need together to create that surety submission.
Awesome.
Definitely. One thing to that, Mo, when you're selecting a CPA, the first question you should ask them is how many other contractors that do bonds do you handle? And that will tell you right up front, there's a lot of good CPA on taxes, and there's a lot of them out there that don't know anything about bonding or what bonding companies look for. So if you can get the right CPA firm, and I recommend a bunch of them all across the state that I know that the quality of their work and the format of their work and et cetera is going to be what a bonding company wants to look at. It's easier. The first impression that you make with a bonding company when we do this booklet we're sending to you, the more information, the better it's put together. The first impression to the bonding company is extremely important. So that's something we work with. We try to tailor make it as simple as possible. But there is some paperwork involved. But again, this is just done one time. We get that done, and we may add a resume if somebody's been hired that's got a lot of experience to, that's important for bonding companies to know. We may have an increase in a line of credit or something of that nature. But there's not going to be a whole lot of recreating the wheel once we're established and we're going somewhere with a bonding company.
Awesome. Definitely, if you guys will look forward to you guys providing that information. And then definitely after our webinar sessions, we definitely typically provide any of the PowerPoint presentation, any notes and speaker information, and any other material that we provide to our participants here today who have registered for the webinar. So we'll definitely be following up with an email with information, and I would definitely love to share the questionnaire and the supportive material that you guys may have that may be helpful for them in their insurance and bonding.
Sounds great.
Awesome. I know we were scheduled to go through 1:30, but I think that's all the questions that we have from our participants, unless you guys have additional information that you guys would like to share. I would definitely like to share to our participants. We definitely encourage you to, again, visit our website, and we definitely encourage those to register to become a client of the Plan Room to get more access to the resources and information and materials that we have here at the Plan Room for our contractors. Definitely, in particular, we are working to establish a good professional service network of professional service providers for our contractors, in particular CPAs. We have one of our clients on the call today, Mr. Kyron Anderson, has been one of our first clients to go through our professional network and CPA process of really connecting him with a quality CPA to assist him in the advancement of his business. And definitely, if you're looking for those particular services, we, definitely we're looking to work with your business to connect you with a good CPA, knowledgeable of the construction industry, that can assist you both in your development of your financial statements, tax filings and reporting, and as well as just assisting you again in getting your financial statements together and the financial health of your business to be attractive for insurance and bonding services as well. So definitely encourage you guys to definitely connect and partner with the Plan Room. I definitely thank Mr. Buckner and Miss Lisa Sabrine, who've offered to meet and organize a meeting with our contractors to give more of a direct address on how our small and emerging contractors going to deal with insurance and bonding issues. And so we'll definitely be looking to follow with that meeting, and hopefully the material that and information that we have today can be a good benchmark and stepping stone on getting a solid insurance and bonding program for our minority and emerging contractors. Again, I would like to give a great thanks to Mr. Mo Duggar and Charles Peden of McGriff Insurance Services on partnering and collaborating with the Plan Room on providing these skills and strategies on attorney insurance and bonding for our emerging contractors. We're looking to partner with you guys here in the future. And looking to maintain this good partnership on providing good services for our clients and contractors here. So if you'd like to have any last words, Mr. Duggar or Mr. Peden, you guys are welcome to share.
I just wanted to thank you, Donovan, for inviting us to spend some time with you this afternoon. Invite anybody out there that's listening today to feel free to reach out once Donovan sends you your contact information, and look forward to talking to you at some point. And hopefully something that we've been able to say or do today will help you guys in the future success of your business. Charlie, anything?
I ditto everything you just said and appreciate your time. So, now, if you got any other questions after we get off the phone or whatever, feel free to give me a call. Mo, I think we'll share all that information to them. I travel a great deal, so Mo, I guess you'll give them cell number too. So that's probably the best way to reach me. Although there is an 800 number in our office that will, if you leave a message on it, I'll get an email that I have a message, and I'll try to respond back as quickly as possible. Thank y'all. Y'all have a great day.
Thank you. You have a most wonderful day. Thank you again, Mr. Peden and Mr. Mo Duggar. And again, thanks for our registrants and attendees for this particular webinar. And thank you again, and look forward to hosting us again. Thanks very much.
Thank you.